Namaste to all our learned speakers, our participants, which we are seeing good in number. I, Shalini Jindal, on behalf of Accounting Standards Board, welcome you all for yet another very informative webinar series on accounting of NPOs. For this, we have our two very learned speakers, CA Ravikant Miralia ji and Mithul Shah ji, who will be taking up the session. To begin with, let me introduce my speakers. Raviji is an FCA having more than experience of 17 years. He worked in Big Fours as senior auditor, mainly in US GAAP. His book, India's Ready Reckoner for Professionals, has been published by Big Publication House. He has provided corporate training to many corporates, has taken many seminars on IFRS, and is a regular faculty for our India's certificate course. See, Mitul Shahji is very young and dynamic practitioner, advisor, and trainer. He has over 11 years of experience in auditing, accounting, advisory, and consulting experience. He had several gap convergence, technical accounting projects in India, Dubai, Abu Dhabi, and Singapore. And I would also like to introduce my learned moderator for the event. He's a senior partner in a CA firm, and he's practicing since 1989. He's associated with Institute in various bank audit study group, in indirect taxes committee, and he's very helpful in formulating the guidance note on tax audit issues in 2022. So, with this brief introduction about my speakers and the moderator, I would hand over to CA Vinay Jain ji to please take up the session with our learned faculty members. Over to you, sir.
Yeah, thank you, Shalini, for the very nice introduction to my eminent speakers. And in absentia of my chairman, Accounting Standard Board, CA Pramod Jain ji, who will be joining us shortly, and Vice Chairman, CA Shajar ji, they all together will be joining very shortly to us. But in between, I've been tasked to be a moderator and keep busy, to keep, keeping the questions and keep my panelists busy. And I'll be traveling between the two. I'll be covering the very important accounting, this technical guide on NPOs, non-profit organization. This is indeed a much sought after technical guide, has been produced by the Accounting Standard Board. And it's so required because the changing scenario, as in the case of the CSR and the foreign fundings, is keep coming, and the size of the NPOs are also coming forth in a very significant mode. So without wasting much of the time and want to utilize much of my time with my eminent speakers, we'll be covering every aspect of the questions which we have drafted, and we have tried to take from the field also with our own experience, so that the maximum amount of the information be covered and be benefited for the members at large. However, if any questions, friends, members seems like it is not being covered, they can put their question in the chat box. So we will be taking that question from the chat box immediately, as soon as possible, by our eminent speaker, CA Mithun Shah ji and Shri Ravikant ji. So going forward, I just put across like going with a basic question first for the benefit of the members. And my first question will be to the Ravikant ji. Ravikant ji, just because since it is something, sometimes the question comes like from the member side, is just can you provide a small explanation of the term NPO and elaborate on the distinction between the NPO and other type of entities?
Yes, sir. Yeah. Good evening to everybody. Thanks to ASB and right. So coming to the question, I mean NPO, is like non-profit organization. The simple, the full form of it. The non-profit organization, that is, I mean, obviously not meant for profit as per their objectives. And this is to serve a specific group of people or community or its members. That is one. And compare it to the other entities like company or partnership or something, if you take it, there if you get any profit or profit, that profit is going to be distributed to the members. It will go back to the members. But in case of NPOs, that will not happen. That will be with the same NPO. It will not be given to the, contributors. It will not be given to the promoters or whoever created the fund basically. And this NPO, people do call it as NGO, right? Non-government organization, which is not under the control of any government or any outsider basically. And if you look at the form of it, it can be like you don't need to look at like the name should be NPO or something. Like say Akshay Patra Foundation, just example. Yeah, that is one NGO kind. And there are so many like so many names are there, so many big entities are there which are NPOs. It may be a trust. My point is like it may be a trust, it may be a society, it may be any other form of it. That is what I would like to say, sir.
Yeah, since Raviji, you had elaborated, the point, since as you had spoken about the difference between the NPOs and the other entities. But now, in any case, when we look into ultimately the interest and the responsibility towards the NPO and as an auditor is towards the third party. As in the case of, it is in the case of NPOs is towards the donors and the contributors. So equally in the case of the profit organization is towards the third party, that is the shareholder or the person who's contributing to the capital. But ultimately, we need to understand the understanding of the accounting. So just to understand the accounting, my question next to the Mr. Mithul Shahji. Mithulji, this bit, I just want to understand. Are these NPOs obligated to use accrual-based accounting, or do they have an option to follow the cash-based accounting also?
Okay. So before I begin, I thank each one of you for giving us this opportunity to be a panelist in this esteemed forum, and also the ASB of ICI for giving us this opportunity to be the panelist here. Now, sir, coming back on the question, as you rightly have asked, whether is there, if you see from the perspective of basis of accounting, do we have to follow only accrual basis of accounting, or also cash basis of accounting is allowed? Now, sir, here interestingly, if you see, while our esteemed institute, we come up with the accounting standard to be followed across entities which are corporate and non-corporate entities in nature. And we give with this accounting standard lot of emphasis towards following accrual system of accounting, because we know that the accrual system of accounting morely rely upon the accurate timing of recording a particular transaction or an event. Okay. Now, from the perspective of NPOs, okay, there are varieties of NPOs that are there in the marketplace, okay, ranging from small, micro to large NPOs. Now, from the perspective of ICI, it is recommended that we follow the accrual basis of accounting, okay. Now, as Mr. Ravikant has rightly spoken about the structure of NPOs, wherein there could be NPOs which are corporate entities in nature, which could be trust, which could be societies. Okay. Now, having said that, the institute which prescribe the accounting standard, okay, morely the corporate entities used to follow them. Okay. So in one variety, if we see that accrual system of accounting is being rigorously followed, and it is a healthy sign. Therefore, institute through our technical guide also recommends that use of accrual system of accounting for non-corporate entities. Okay. Now here the caveat that we should be able to carefully see is it is recommended. Okay. And it is not mandatory. So if you see, it is not mandatory. However, it is recommended. Now, some can argue and say that was the NGO or NPO that is currently under discussion is not material enough. It's a micro NPO or a small NPO. In that case, can they follow cash system of accounting? In that case, we will say that yes, even that is an prescribed or an allowed way of reporting your financial numbers. But having said that, the best and the healthy practice is always to follow accrual system of accounting, sir, because we know that it gives the real essence to any transaction, starting from the day it starts and till the day it ends. Okay, so all those series of events are appropriately and accurately recorded under accrual system of accounting.
Thank you. Very well explained, Raviji. I mean,
Vinay
in
ji,
between, yeah, I welcome our chairman, Accounting Standard Board, CA Pramod Jain ji. He has joined us. So,
sorry, I'm at the airport. Actually, I was there security check, so I could not join at right time. But yes, in fact, if I talk about uh, this webinar today, this is very, very important from the perspective that in India now, there is a social stock exchange. There is a growing need for more and more NPOs who are contributing in the various fields, including education, hospital, medicine, and many others, yoga and all others. Now, as rightly said by Mithul Shahji, that yes, the institute has rightly brought in the technical guide for the NPOs. Uh, the basic purpose basically there was to standardize the financial statement formats. Accounting for NPOs is not new; it was already there. So by this technical guide, it is not that something new has been prescribed for the NPOs. For example, if I talk about a Section 8 company, a Section 8 company has no option but to follow the mercantile system of accounting. It has no option at all. But for others, it will depend upon case to case because when their regulated law doesn't talk about any specific method of accounting, then the assessee, or I would say I'm using the word assessee because under the income tax it is there on it, which allows both income tax as well as cash. So it is the option of the NPO to follow either cash or mercantile system account. However, suppose even it is a Section 8 company, or for that matter, I talk about a trust or a society. In that case too, under the income tax now, what they are allowing basically is the expenditure, the application thereof, only on cash basis. So even if you are following mercantile system accounting, for taxation or other purposes, you have to follow the mixed basis. But here we have to be very, very clear that when you are talking about accounting principles, you have to follow only one. If it is an accrual system, follow accrual system. If the assessee is not, if the NPO is not following accrual system, the chartered accountant who is auditing it will have no option but to qualify. So my other laws, taxation, other laws will not govern my accounting. The only purpose these technical guides have been brought in to take the country to the newer heights, to standardize the formats, so that it is not that one entity, one trust is having another system of presenting its financial statements, another trust is doing another way. And if tomorrow anyone wants to have a consolidate to analyze the data, so there would be no standardization. So that's why it is not able to do that. Hence, we thought it prudent to have a Do You Know series by our respected Vice Chairman Abhay Chajerji, who is again just joining me. He is also going on a important meeting along with me. But yes, these technical guides, I respect that they should be followed by all. And in this line, this webinar today, where the moderator today is our very, very dear friend Vinay Jainji, and our two panelists, the extreme panelists, our learned panelists, both are great knowledgeable persons into the Ind-AS. They have been into our FDP faculty development program, participants and contributors there, both Ravi Kanji and Mithun Shahji. I am hoping that today on the balance sheet, tomorrow on the income expenditure side, all the members would be having a great learning session. Not only today, in fact, tomorrow also. Today it is balance sheet, tomorrow it would be income expenditure. And just to share with everyone that all these webinars, and including this one, would be available later on also. So anyone can go to ICI TV or the ASB website. There you'll find a link, and there you can go and view this video later on also if you want to have a clarification on any issue. Thank you. Sorry for bugging in and putting my point. Vinayji, please carry it forward, please.
Thank you, sir.
Thank you, Pramodji. It was always nice to hear you. Always, it's always a value added, and sometimes it is now upcoming advice and sincere advice from you. Always, it's welcome to the profession and to us equally, and in specific to me. Having said so, friends, has been told by the chairman and my eminent speakers, there's two things what you need to know before I put on a new question to you. See, this accounting and the taxation are two independent issues. Right? We should not mingle with the together. Like they are independent issues. So accounting is what the technical guide suggests is about the accounting. The taxation is independent to the accounting. So we be careful while going through with the technical guides and equally through this webinar, and the whatever been be spoken by my eminent panelists and including my chairman who has spoke about this just now, is about the accounting and how the financial statement will be presented. And when we spoke about how the financial statement will be prepared and presented, first thing which comes to our mind is the accounting standards. Whether we have to follow the accounting standard or not, whether it is applicable or not, if it is applicable, how it is applicable, to what extent it is applicable, is it applicable in totality as in the case of the commercial organization, or the NPO has some concession over it. So I'll just try to indulge with Ravi Kanji. Ravi Kanji, I'll request you to put us go through with this one point. See, when do the AS, that is the accounting standard formulated by ICI, apply to an NPO? And can just small another point adding to this precise point, can you provide example of the scenario in which AS would apply to an NPO, even if only a small proportion of its activity is commercial, industrial, or business oriented? So this is something like every member must be having some point in mind. So over to Ravikant.
Yes, it's very true. Actually, everybody will get this basic question whether accounting standard is applicable to this NPO. Yeah. See, first before answering, what is the form of NPO is important. The form of NPO can be a corporate or non-corporate. Yeah. So corporate in the sense like Section 8 company. So if it is a Section 8 company, the minute you say company, then Companies Act is applicable. Section 133 is applicable. Right. So obviously accounting standards are mandatory. Like again, is it a accounting standards or Ind AS? So anyone obviously you are supposed to comply. If it is Ind AS, as you know, it goes by the net worth. If the net worth is net worth of your NPO, I mean to say Section 8 company is more than 200 or equal to 250 crores, then obviously yes, you have to apply Ind AS. Or this Section 8 is a subsidiary or an associate also of any other company which is following Ind AS, then still that also has to comply with Ind AS. If you say, no, sir, my net worth is not like that, okay, I don't fall under Ind AS, then obviously you are supposed to comply with accounting standards. Yeah. So now when you say accounting standards, then there are again two classifications. Accounting standard for SMC, non-SMC. Again, this bifurcation is also required. I mean, if you are a SMC, you will get some exemptions. For that purpose, this bifurcation is required. And the next point will come if it is non-corporate entity. Yeah. See, if you look at the preface to accounting standards, preface to accounting standards is very clearly says accounting standards are applicable whenever an entity prepares general purpose financial statements. Yeah, entity includes anybody like a trust society or company in a partnership firm, everybody comes into the picture. And they have given one small exemption. If any NPO or any entity which is into 100% of non-profit, I mean to say not into business activity, commercial activity or industrial activity, then they don't need to comply. That sentence though they have used in the preface to accounting standard. So now the question, like, so for the non-corporate, like a trust and other people, what are we supposed to do? So strictly as per the preface, so it says no, but this technical guide has very clearly said one paragraph, it is very clearly says, it is recommended to follow first. They said they use the word recommended to follow, but end of the day, whether the NPO has followed or not followed is end of the day is going to be attested by us. When the member is performing the attested function, then he has to, that is his duty. It's like mandatorily he has to check. I mean, if they are do not follow, then our auditor, our chartered accountant is going to qualify or adverse, whatever. I mean, he's going to modify his opinion. So end of the day, you are supposed to follow accounting standards for everybody. And there was one small rule, like last point when you said, sorry, when I am say only 1% or 2% of my activities are commercial activity, 98% is into non-profit activities, then there is no exemption to you. First of all, you are supposed to follow 100% of your all the funds and everything is supposed to be in line with accounting standards. Yes, sir. Over to you, sir.
Yeah, thank you. Just see the way the simplicity, the way you are just telling. I suppose any member, I suppose, will be quite benefited the way the things have been interpreted and the will be deliberated by you. Now the
Thanks.
point is idea is that after we have understood whether the accounting standard, the way the accounting standard will be followed, the first thing which comes to our mind immediately is that as in the case of corporate sector, the certain at a certain level, it is mentioned that how what amount of the books of accounts will be maintained and what amount of the books of accounts will be prepared. So in the case of non-corporate sector also, we are supposed in the various sects as this number of the books has to be maintained or not to be maintained. So my question is to Mithulji. Mithul, just tell me that, I mean, in the case of NP also, is it any specific requirement as to the what are the books of accounts in the maintenance of the books of account? What sort of it will be there? Like, I mean, is a very important question so that we can tell to the NPOs, because ultimately we are the person who are mediating. We are the mediator. Now I am the moderator, but they are the mediator. Ultimately, the professional are the mediator. So my point is, see, we have to understand first, and then we have to tell to other friends like how the what are the books of account, because this is important. That starts the beginning. Please, over to me.
Perfectly. Perfect, sir. So, sir, basically, if you see now, one of the important point which Pramod sir has rightly highlighted, okay, as part of the introduction is that standardizing the process. Okay. Now, I was just going through a research report that was published on the NPOs. Okay. I see that there are close to 390,000 NPOs, okay, or NGOs across globe, out of which there are 17,000 or so registered in India in varieties of form. There can be Section 8 companies, or there can be a trust, or that could be a society, etc., or some which is specifically created to meet the requirements of Income Tax Act or Foreign Contribution Regulation Act, etc. Under various framework, this setup has been in place. Now, one of the keyword or key element that is very, very important is standardizing the process. Now, how standardizing the process would work is by having a set of records, okay, and on those set of records, there is uniformity in the practice. Now, if you see the technical guidance that has come out, okay, and also if you after this session, if you go through, or in your experience, you would have seen this, that for example, let's say if you have audited or accounted for an NPO, you would have seen that there are some standard formats or the disclosures that these entities make. Okay, now it could be, for example, the income and expenditure statement, number one, balance sheet, receipt and payment. Okay, so now in terms of, if you see the books of accounts, so the books of accounts in parallel to these formats could be your cash book. Now, the cash book is something that would record all the inflows and outflows related to the activities of that NPO, number one. Now, related to that cash flows, on the second leg, okay, you have your journal entries that would give you the journal entries, the double entry system, which is the essence, which is the core of our accounting. Okay, that is something that is we with the NPO would have to maintain. Then basically keeping the ledgers intact so that for all your future reference purposes, for all your regulatory requirements, these ledger play a vital role, okay, in structuring the receipt and payment account, in income and expenditure statement, in balance sheet, and also in preparing your bank reconciliation statement. So if you summarize the critical books of accounts that NPO would have to keep, okay, now this is as per the technical guide. But having said that, if the NPO wish to maintain further books of account, it is definitely recommended. But at basic, you need to have a cash book of account, a receipt and payment statement that would record all your inflows, that would record all your outflows. Then your income and expenditure statement that the NPO would create, okay, by giving the accounting as per the norms of accounting standard, and vis-a-vis you will also maintain a balance sheet. Okay, lastly, on the bank reconciliation system, okay, which generally if the NPOs are small or medium, they have a very easy sort of reconciliation in place. But we have seen in our experience that NPOs which are generally large, they do not maintain, or there are differences which are not getting reconciled. So we would give a significance to maintaining a proper book of reconciliation, or sorry, bank reconciliation also for those entities. Yes, sir. Over to you
Yeah.
with this.
Thank you. Thank you. Yeah. Thank. And it is. Fine, Mithulji. Thank you very much. Is echo in here, right? It is with you also, Mithulji?
Yes, sir. We could hear that your voice is echoing.
Yeah, it's echo.
The video is also now not clear. We are not able to see your face.
I see.
Now it is clear. We can see your face.
Here, na? But echo is still there, na?
Echo is still there. I think you will have to mute if you have connected through mobile or laptop.
No,
you
no,
have
it's
to mute your
laptop.
device. Okay, we
Yeah.
see. Okay, now it is
it
clear.
okay, na? No, still echo is there, na?
Still echo is there. Some amount of echo is there.
Sir, you entered through mobile also. That you mute it, please.
Yes.
I did.
We could see two devices here. One is Vinay Jain 1 and Vinay Jain.
Fair enough. Okay, I'll check it out. Fair enough, friends. We have to go ahead. Sorry for interruption.
Sir, you can mute the mobile.
Yeah, please. Is it okay now?
Now it is okay.
Oh, yes, thank you very much. Thanks for helping me. So, friends, well said by Mithulji. Its idea is the requirement as to the maintenance of the accounts, but the larger portion of the funds which are coming to the NPOs or the NGOs, we always say it so. Because there's hardly any difference between the two. The only difference is somewhere the word being shifted from NGO to NPO. Having said so, friends, but the larger portion which is coming as an incoming factor is the contribution which we are receiving from the third party, is there as in a donation or is as in contribution or the resourceful from the as in grant. Now the point is now from the various way also, friends, what it is happening out there is that since there is a requirement for the corporate to spend as in CSR. So lot of CSR are now been transferring to the NPOs. And there's a requirement as to how they can spend, how they net spend, and then equally for the donor also, there's a requirement to get a report. So this is a fund which is required, but now there's always a confusion, sometimes generates. And I just request Raviji to please explain on this point. See, what is the fund-based accounting? Because the technical guides, one word is used is what is a fund-based accounting? And how does it relate to maintaining separate ledgers and records for grant received from different sources? Because this See, this is the receipt part and the major part of the financial statement from where the beginning of the NPO is. So over to Ravi.
Yes, sir. See, I mean, the basic meaning of fund-based accounting, you will be maintaining separate ledgers and records for each fund. I mean, see, as you said, like money will be received from different foundations or donors or from outside India, inside India. And so obviously those donors or respective persons will be asking for like, how is my fund utilized? Right. So, so when you want to answer even them also, you need, if you don't have yourself the data related to like, I mean, how much is the amount received, how much is being really utilized for what purpose? If you club every amount received and if you try to account it, then it is obviously difficult for, I mean, for answering the same thing. Right. That is one thing. And even if you look at the format given for the income and expenditure account, there it's not like exactly fund-based accounting, like at least restricted fund, unrestricted fund, separate columns are supposed to be prepared. And the total column for the current year and previous year, like then only you will get to know, I mean, the correct idea. That's what I feel, sir.
Yeah, it is really wonderful. It's because one need to understand how to make ensure that, because this is ultimately these financial statements are for the benefit of the third party who is contributing to the organization.
Correct.
So that's we need to, I mean, that need to be explicitly defining where the funds are coming and where the funds are going. Is that so, Raviji?
Yes, sir. Yes, sir. Exactly.
So, I mean, that's how we need to ensure the transparency, and that is ultimately the objective of the technical guide also, to ensure the transparency in the larger world of the NPO, so that the trust of the beneficiary equally by the resourceful, the donors and the contributors are also being generated. So that's the reason we are trying to bring into this technical guide, and the institute and the accounting center board has done a wonderful job. So now the question is to Mithulji. See, Mithulji, see, ultimately, NPOs have generating various type of funds now. So the question from where the Raviji has left, like I want to continue from you now. So what is the classification of the NPOs fund in the balance sheet? Because there are a number of the funds out there available. So what is the classification, please?
Yes, sir. So I think it's an interesting question. If you see from the perspective of a normal corporate entity where we have equity, as we name the on the left hand side, we see something as an equity and shareholders reserve. In NPOs, this is more towards the sources of fund. Okay, so where basically this money is coming from. Now, if you see from the perspective of the format as to how we have categorized this or classified this, now interestingly, if you see, there are two buckets under which this fund would fall into. Now, one is a unrestricted fund, you can say, okay, and another one is a restricted fund with some caveats that we would like to add. Now, let me just summarize the first bucket, which is the unrestricted fund, and then let me take up the restricted fund. Now, unrestricted fund, if you see, that could be your general reserve, as you also, now if you just correlate this with your normal corporate entity and the balance sheet that you see for a normal corporate entity, now there would be a P&L general reserve or P&L reserve, okay? So this would be in a way a general fund that the NPO would be able to maintain. Then there is a specific designated fund, okay? Now, a designated fund could be the management would have decided that, okay, for any designated or any specific purposes, they will be using it or using this fund for, okay? So the purpose is defined for the designated fund. Now, let us say in corporate world, okay, in the corporate balance sheet that we see, we have something called as ESOP reserve, okay? You can correlate. This is just to give you a perspective. Now, then there is a corpus fund. Now, corpus fund is the initial fund with which the donor or grantor start the NPO, okay, like your equity share capital. So these are the list of unrestricted fund that generally gets into the classification. Now coming on to the other bucket, which is the restricted fund. Now restricted fund is, you can say that in the world of the banking clients, if you see their balance sheet or an NBFC client in India, you see something called a special reserve. Okay. Now that NBFC, if you see that special reserve, they cannot use it for any activity in their business, where that fund is been prescribed by RBI, and all the condition attached to those funds has to be fulfilled before the company utilizes them. Okay. Now, similarly, in the world of NPOs, you can categorize this under restricted fund. So restricted fund are something which has come into existence due to some legal restrictions. Okay. There are some legal conditions attached to those funds. Now, only in those events in which those legality permits you to use it, those funds can be used it. Now, again, one of the fund that gets covered as part of restricted fund is endowment fund. Okay. Now, interestingly, endowment fund are again a specific fund. However, now this has been endowed in a way that once you invest or once you contribute money to this fund, subsequently that income that gets generated, okay, out of this fund would be utilized for your activity. Now let's take a simple example. The NPO is in the activity of providing education. Okay. Now education ranging from boys, girls, and also special persons. Okay. Especially differently able people. So they provide that. Now in that case, they come out with, and or that, let's say there is a legality or legal restriction for them to create a restricted fund in the nature of endowment fund. So let's say the grantor, when they come up with this NPO, they contribute an X number. Now, when it contributes, let's say for promotion of girls' education, okay, so that contribution would remain intact, and this money they would invest in, let's say, a bank FD or in some other form. So the interest or the revenue that gets generated, or the rather income that gets generated out of this investment, they will utilize for promoting the girls' education. Now, this is how the endowment fund would work. So, sir, now if I just summarize my overall submission here, you see there are two types of categories. One is restricted and another one is unrestricted. Within restricted, you have only one fund, which is endowment fund. Apart from the restricted, there is unrestricted, wherein the general fund, corpus fund, designated fund. So this type of fund would come inside that category.
Thank you, Ravi. As Mithulji, his idea is this. I just want to continue. I want to stay with you for one more minute. Ravi, just stay back. His idea is, Mithulji, just you had used two words. One is the restricted, other is the designated. Now, what I understood with your deliberation and the submission is out there that the restricted fund is by virtue of a restriction being imposed by the donor. And the designated fund is being created by the NPOs organization, the management itself, for a specific purpose.
Correct.
Is that be so?
Yes, sir. So let me just explain or elaborate a bit on this question. So as you rightly said, designated fund are management or donor or grantor specified funds. Okay. As I gave you an example of ESOP, now you can also say that as part of the accounting standard, ESOP reserves are supposed to be maintained. But this was just to give an example for easy understanding of the audience. Okay. Now, this fund, when it comes into the books of accounts, our minds are set that, boss, anything and everything that relates to the functioning of the ESOP scheme needs to be routed through this reserve or through this fund. Similarly, in the world of NPOs, this designated fund, now you just, let's say, there is a capital fund. Now you introduce a capital fund for buying property, plant, and equipments for your NPO. Okay. Now, management has intended, or the donor has intended, that this capital fund of, let's say, 1 lakh rupees, okay, would purely be dedicated or designated for buying of your property, plant, and equipment. Now, that could be after 6 months, that could be after 1 year, but you have created a fund for it. Okay. Similarly, restricted fund, when I said, I was correlating this with the world of NBFC that we have in India, where you will see that there is a special reserve that gets created, wherein every year profit gets contributed to the special reserve. Now that reserve is a legal requirement. Now again, the legal requirement in the world of NPO could be you maintaining a capital fund. Could be a possibility wherein the government or the legal restriction for you to create a fund that should promote purchase of property, plant, and equipment. For example, if you are in a healthcare, okay, you are an NPO or an NGO who's promoting healthcare to the people across India, okay. Now you need to maintain a specified set of ISO certified machineries with you. And for that, you need to create a special reserve, which the government wants you to maintain it. So in that case, the designation will change it to restricted fund.
Thank you. It's really wonderful. It's very, very well explained. And now, either way, first I'll ask Raviji and Mithulji. You are equally, request if Raviji and Mithulji together they can answer this one small question. If the review at this side is a restricted, unrestricted, then the designated, then the corpus. Now the point is the corpus is independent to the restricted, unrestricted, and designated, or the out of this restricted, unrestricted, and designated, the corpus can also be built up. How to
Yeah. See, as you said, like funds overallly, if you classify, it is into two. One is restricted, unrestricted. Like as Mithul already told, just to sum it up, when I say restricted fund, the restriction will come from the donor, whoever contributed, or it may be a legal restriction. So here restrictions are given by two parties, law or contract by the donor. Done. So when it comes to unrestricted funds, restricted funds are further classified into three. One is corpus, next is designated fund, next is general fund. I repeat, corpus, designated, unrestricted fund. See, since you pointed out, let me go to designated fund. Designated fund is also kind of restricted, but it is not restricted by a third party, or is not restricted by the law. It is self-restricted, wherein our management, the fund management or the board, whatever it is, the ultimate authority, like TCWG, what you say, they have appropriated the funds from their surplus and for the specific purpose. Then it will become designated fund. And when I say corpus fund also is part and parcel of the unrestricted fund only. This is a contribution by the founders or the promoters, basically. Yeah, this, it's like a capital, basic capital, I can say in simple words. That can be added by further contribution by the promoters. It is not the amount which is contributed by outsider. That is a simple word. Right. And general fund, you say, which is not other than this. Which is not corpus fund, which is not designated fund. I can keep it under general fund. This can be used for any purpose since it is not mentioned very clearly. I think that answers you, sir.
Yeah, it's a really quite clear now. I see, Raviji, again, I'll just ask you one more related question to you. And while just presenting in the not so accounts as regard to the unrestricted funds, is there any sub classification in specific is required in giving a presentation to the not so accounts of an NPO, like in relation to unrestricted fund, or is it the way we show in reserve and surplus, as in the corporates and the business entity, we have to show it separately, and that's all?
So the classification in the notes, like under the reserves and surplus, we will be having two separate line items. That is for a restricted fund, unrestricted funds. And for the unrestricted funds, the movement, the like say basic I mean, it depends on the each item. So when I say corpus fund, what is the opening balance and what is any contribution in the current year and the closing balance. If it is a general fund, like, I mean, it can be a, what is that? A surplus also can be there. So opening balance plus current year profit, or, I mean, general donate. I mean, it depends on the movement is supposed to be short, sir, basically.
Yeah. So, Mithunji, can it be so or the Ravi equally like? And this is a question is common, like in the case of the restricted funds, since the restriction is imposed by virtue of a law, enactment of the law, I mean, by virtue of enforcement of any law or by enforcement of any contractual obligation by a third party. I mean, while showing the restricted funds in the balance sheet or in the notes, right, can we show it separately? I mean, say number of them, the one NPO must be having a number of unrestricted fund in their kitty. So it is better to show it individually or together in as a one group, like how the presentation.
Sir, sir, basically, if you see the world of accounting, we try to be as specific, and with that specification, okay, we try to be as detailed within the norms of the standards, okay, that we generally do. Now, we say that let us be as clear as that. If you just say your inventory also, okay, just to correlate this with inventory. Now, our institute has clearly given us a guidance that if your inventory has raw material, WIP, FG, it is always good because that gives adequate information to the users of the financial statement, correct? So now, correlating this statement in the world of the restricted fund, it is a healthy sign and it is very much required, okay, from the technical guidance itself to be as specific as we can. Okay. Now you can see that within the umbrella of restricted fund, there are different or varieties of funds that are being categorized. Okay. To name a few, you have some program restricted fund. Okay. Now let me just go back to the example of education. The NPO is in the promotion of education. Okay. Now every once the summer holiday starts, which is around April, May, for students across India, okay, they run a program for promoting books for the next standard, clothes, bags, water bottles, etc. Correct. So now, in such situation, it's a program restricted fund, wherein due to some legal and also the requirement, the fund is maintaining a appropriation of money. Now, this money needs to be used towards that particular program, okay, which has been advised or which has been required as part of the legal framework. Number one. Similarly, there could be, let's say, a time restricted fund. Now, in the era of COVID, okay, when vaccine was supposed to be applied or provided to the audience or people in India, okay, there were NGOs who participated. Now everybody knows that yes, if you want to be safe, you need to ensure that it in a particular time frame, this vaccine needs to be taken, okay, by the people across the country. Now, in that case, if you are creating some fund, a time restricted fund wherein for promotion of vaccination program, okay, if you are doing something, now that fund or that appropriation will be utilized within the time frame set by the legal framework, okay. Then comes some other examples of, as Ravi has rightly highlighted, that the donor restricted fund. If there are any specific funds or restrictions or which has been created or originated by the donors, okay, now those again has to be categorized separately in the umbrella of restricted fund. So the finer the details, the better it is for the users to read the financial statement.
Thank you. Mithunji. You see, Raviji, just because we have to go through the balance sheet as been instructed by the ASB chairman. So we have to go on with the rapid round also, or we have to looking at to the time staying with us. Like, so the question is to Raviji. See, as there is that, see, we have to go now to the balance sheet because already we are into the balance sheet. So we have to look into this aspect. 2 points I'm just asking subsequently to you. is the particulars what are to be shown in the surplus and the deficit, they're under the surplus and deficit. And the second point is in continuation of the to this particular question. This how the long-term borrowings to be classified in the notes to accounts, like, because we together one is up and down together. I mean they are in sequence. So my question to Ravi ji, please explicitly define how the things will be.
Yes, sir. Sir, with respect to the, surplus or deficit, it starts with the opening balance, the basic thing, and plus the current year, whatever you say, the current year surplus or deficit, I mean to say income over expenditure or expenditure over income, which is nothing but in simple words, profit or loss. That is the basic disclosure which you need to provide. That leads to your closing balance, which will be appearing in the balance sheet. And with respect to long-term borrowings, it is, sir, if I see overall, just to make it simpler, other than the equity portion. So if I divide the entire balance sheet into assets, liability, and equity, okay, other than the equity portion, rest of the thing is more or less similar to our Schedule 3 Division 1. So in that, so let me conclude, like long-term borrowings, like you need to give a disclosure for the term loans which are received from banks and from other parties, if there is any. Okay, and if you have received something from the related party, maybe some holding company, subsidiary, somebody will be there. Correct? You may be an associate to some other entity. Correct. And when I say like along with the long-term borrowing, just not only just term loan from banks and other parties and related parties, one more like normal, like which you do it in Schedule 3, like you have to classify sub-classification like secured and unsecured. The minute you say secured, then obviously what is the nature of security, which you need to provide it. At the same time, the minute you say it's a long term, the basic next question will come terms of repayment. Correct. Other important terms. That how many years and what is the rate and etc. You are supposed to. There may be. Free of interest. Yes, you need to mention like 0% of interest. This is the basic requirements, which is I mean to say more or less equal to Schedule 3 requirement.
Yeah, thank you very much. Just you have touched upon one small the phrase in between, that is the related party. My Mithulji, that's why I'm asking you. Why it is so significant out there to present an related party borrowings separately and significantly out there in the not so accounts? Like, I mean, how it is so significant? Like, please.
Sir, it is very important. Okay. So if you even see our reporting under the world of the corporate entities, now one of the crucial report or an disclosure that comes in the financial statement is the related party transactions. It is very, very essential for us to explain that the transactions are carried at true and fair. That is the essence or the auditing profession relies upon. Okay, the true and fair view of a particular entity. Okay, now within entity, your corporate and also the non-corporate entities would fall. So the very purpose on which or objective that we are trying to cover from the auditing world is a true and fair view of a financial statement. Now it is very, very critical that all those entities that report all their transactions are true and fair. Now, with related parties, we have seen in our experience that sometimes those details do not come out very clearly, and that misleads the reader of the financial statement. Now, to avoid that, Institute very beautifully has presented a format wherein they want to be as detailed as possible in terms of how you report your related party transaction. Now, related party would be the donors, their relatives, the directors of the NPOs, okay? Those entities or those transaction on which they exercise control or they basically have a say, which is larger than the other participants in the NPOs, okay? Now, the technical guidance or the world of accounting wants us to ensure that these transactions are at true and fair view, okay, are at arm's length transaction. Now, everybody knows that arm's length, it has to be comparable with the market transaction, okay? The premium, the interest rate, the tenure, the criterias that defines the related party transactions are comparable with an independent transaction in the marketplace. Now, these are very, very essential or essence that needs to get demonstrated in the financial statement. And therefore, it becomes critical that we separately provide adequate disclosures regarding related party transactions. So,
Yeah, thank you, Nitin. This Raviji, you have touched
Yes.
upon. I just missed one point, as you have touched upon one is that sometimes the NPOs they get a loan at the 0% and they sort of an interest free also. So it becomes an important, like, I mean, sometimes we feel what is the significance of this? How does it matter that NPO gets an 0%, 1% or the 10% or 12% of the market rate or non-market rate? But then sometimes the points comes to our mind how it is so significant that we should necessarily and separately disclose the borrowings which are interest free, and then other than the borrowings in principal amount, which is to be whether to be shown separately, what is the significance of the same, and then point is out there that does it has any implication about to the for the third party how to read through the financial statement in relation to the 0% borrowings.
Yes, sir. I mean, the long-term borrowing, the disclosure, as per the technical guide, it gives us like along with the terms of repayment, and they do ask for separate disclosure of interest-free borrowings that should be disclosed separately. Yeah. So, and which are all interest-bearing? I mean, interest-free borrowing separate, interest-bearing is separate, and interest accrued and due on those loans. I mean, interest accrued for the interest bearing also, that also you need to show separately. And that is for the basic understanding of the, I mean, user of financial statement, like, I mean, how much they have got it through. See, if somebody received interest-free borrowing, I mean, from the government or from somebody, I mean, when I'm getting the total interest expenditure, what is the percentage or what is the rate you are getting? I think that's a for understanding purpose that is very much required. I feel, sir. You can add little more.
Yeah, definitely. That's true. It's a wonderful right. So because the unless we know what the outflow will be in the future, the interest free generates, and because ultimately we need to understand how the contributions are coming. Is it the contribution coming through the corpus or through the donors, which is unconditional or the conditional loans, and that the conditional loans are also coming through the various way, like through interest and interest free, and under what condition, terms and condition they are coming, so that the third party can understand how the existence of this particular NPV. Am I right, sir?
Yes, sir.
Thank you.
Thank you, sir.
See, Mitulji, we have to move forward like in the balance sheet on the liability side only. That is the next question, which comes always the provision, because the provision is having a significant amount of presence out there in the balance sheet. So my question to you is very simple. How should the long-term provision be categorized in the not-so counts of an NPO? And under the classification of others for long-term provision, can you just what is the significance of specifying the nature of these provisions? And can you provide some bit examples like what sort of these provisions could be like, please, Mitulji?
sure, sir, definitely. So, in terms of the provision, okay, now as we all know that the accounting standard defines provision as an expected cash outflow, okay, that would arise in the future, and that is towards a present obligation which has arisen after because of a past event, okay. So there is an expected future outflow. Now, for this outflow, we need to range this, whether this outflow is in the next 12 months or it is beyond 12 months. Now, this would signify if it is meeting the definition of provision. Firstly, we would kind of classify this as provision, and accordingly, we will also measure it. Now comes is how are we presenting this? Now, there the maturity of this provision, the expectation on the future, if you assess that it will be paid in the next 12 months, then it's a short-term provision for you. And if it is beyond 12 months, we would say that it is a long-term provision in nature. Okay. Now, as simple example could be your employee benefit related payouts. Okay. Now you have, let's say, gratuity, leave encashment, okay, or your PF. Okay. Now these are some simple examples that would fall within the ambit of provision. Now, based on the expectation of when this outflow would occur to that NPO, you would categorize this under a long-term provision or a short-term provision. Now, there are also other examples that prevails, okay, in the world of NPOs, and that are something called as decommissioning liability. Okay. Now, if you are running an NPO operation from a specific premise, and contractually, if you are supposed to, when you vacate the premise, you are supposed to ensure that it is as on that it is same as it was on the day one of your occupation of that particular premise. If such liabilities are there in your contract and you have to provide for it once you vacate, then it is called as a decommissioning liability, which you need to foresee and provide in the books of accounts of yours. So this is another example. Then there are restructuring related costs. If you say that, okay, eventually that you have a plan to restructure, and as part of your activities, okay, that you foresee, you start creating a provision for it. You see that, okay, after 5 years there will be some outflow that can come to you, and it is mandatory for you to act on those obligation, and you start providing for in the current situation. Okay. So that again, you can categorize this as an example that you would have in your NPO financial statement.
Thank you, Mithulji. See, Mithulji, stay back with us. The idea is there's another question which always turns out in my mind is, other than the provisions, is the other current liabilities. As in the case of other provision, there is other current liabilities. So I mean, the question comes out immediately is, what is the classification of the other current liabilities in the not so counts of an NPO, right? I mean, how this comes, like how it comes?
I agree, sir. Sir, if you see from the perspective of how norms have been categorized in the presentation of the financial statement, okay, or the balance sheet that we have for NPOs. Now, other current liability is one line items within current liabilities. Now, when we say current, we it 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 triggers that any item, okay, that would needs to be met in the next 12 months needs to be categorized this under current category. Okay. Now, if it is a short-term borrowing, you have a separate category of disclosure in the balance sheet. If it is your loans and advances, then current loans and advances, then it becomes your separate category of presentation in the balance sheet. And let's say that it is a line item that would eventually fall within other current liabilities. Again, having said that, the maturity of which is in the next 12 months. Now you can ask me one question: what could be the examples that would eventually fall under the umbrella of other current liabilities? You can, in our experience, we would have seen something like income received in advance, okay, or revenue received in advance, or let's say accrued expenses.
Please.
I'm sorry,
No, please.
accrued expenses, okay. For example, as simple as your salaries payable, wages payable, rent payable, okay. Now this could be your simple example that would eventually get categorized as part of your other current liabilities.
Friends, before I go to the next question, and my only our submission out there is, while we are discussing these provisions, liabilities, and everything, don't miss we are discussing these all things in. So don't miss that particular point. See, until unless we reach to this and we stay with this particular observation, then we instantly understand how the importance of this current liabilities, other current liabilities, and the provisions are there. So Raviji, you see, in between just we miss one small point, like we discuss long-term borrowings. Now, there's obviously every borrowing is not long-term. Sometimes it's just short-term borrowings also. So in the case of short-term borrowings, I mean, how the classification will be there in the not-so counts. And so equally, the related question we miss at the time of the provision is the short-term provision. We discussed long-term provision, but now I just request you put across that the short-term borrowings and the short-term. Together, these two questions, over to Ravi.
Yes, sir. So can I share the screen? I mean, for a second. I mean, basic format. I think. Are you able to see the screen?
Yes.
Please.
Is
Yeah.
that?
Yeah, it's not over.
I just made a very basic PPT. Right. I mean, short-term borrowings, like first the thing is loans repayable on demand. Yes, which is repayable on demand, obviously short-term, because other party has got a right. So for which you need to see the contract basically. Like, so as per the contract, the other party has right to ask anytime, not like whether we'll ask or not. That we cannot decide. If he has the right, then I am supposed to show it always under short-term borrowing. Yes, if this is loan repayable on demand, like demand, I mean, OD basically, kind of, right? That they have the right. So that is either it from bank or is it from other parties. You need to have a separate line items. At the same time, as usual, like what we said in the long-term borrowings, here also, which is from the related parties. Yes, you have to show separately. And if there is any other loan, right? If there is other loan, I mean, generally some errors happen in any kind of financial statements, not restricted to NPO. Other loans, people do say they don't specify the nature, and the amount is going to be very big number. That should not be there. You should, like, if there is other loan, you have to say what it is exactly, right? That we need to remember. And as we already told, as everything is supposed to be like secured, unsecured classification is must, right? If it is secured, nature of security, right? Those are all mandatorily you are supposed, in each case you are supposed to mention that, right? And this is like we are following, like when I say current, non-current, when it comes to the classification, then if there is a long-term borrowing which is supposed to be paid within 12 months, that is going to be treated as current borrowing, that is short-term borrowing. So that is nothing but current maturities of long-term borrowing also supposed to be going to be part and parcel of our short-term borrowing heads up.
Yeah. Fair enough. As regard to the provisions, Raviji?
So with respect to provisions,
Yeah.
just a second. Yeah, with respect to provisions, with respect, I mean to say provision for employee benefits. So the
That is what we
employee,
are discussing. Sorry, just we are discussing is the long-term provision we have since discussed. It is what it will be there in the short-term provision as regard to the notes.
yeah, short-term provisions, again, short-term, long-term provisions also, like what we say, provision related to employee benefits like gratuity, leave encashment, whatever the employee related provisions. The same thing, the short, I mean, which is related to be, I mean, current portion of the long-term provision. I mean, the actual valuation report, if you see the actual itself, they'll give you, he will bifurcate the total amount of liability between the current payable, current and long term. Yeah, this is going to be the short term provision. At the same time, any other provision, I mean to say, other than employee related provisions. Yeah, see, but as Mithul very clearly told, generally one small error also will happen. Rent payable, salary payable, people do keep it under provision head. No, that is not supposed to be. A provision is something which requires significant degree of estimation. Yeah, but here for rent payable, salary payable, I have clear data, clear number. So that should not be under the provision. That should be under other current liability only, not under the provision exactly. So that I mean to say, as far as I mean, the employee benefit provision is only the general provision which will come. Or like as Mithul told already, any restructuring provision, like any, I mean, restoration of building or something, if you have taken it on lease, you had an obligation to bring it to the original position or something, that provision, if it is expected to be closed within a 12 months time, then that kind of provision also can come under short-term provisions, sir.
Yeah. So the provisions basically, Raviji, what you're saying, that the gross provisions has to be bifurcated between the two parts, that is the long term and the short term. So friends, and which are the ascertained amount, these are not the provision, these are the liabilities. Be careful, these are the liabilities, not the provisions. So provisions are something which are unrealistic. That not unrealistic, I should say. This is not unmeasured, rather, I should say. But it's on an estimated basis. Which the thing being done is the provisions. If it is estimated correctly to the pie and penny, these are the liabilities should be worked out if it is in accrued during the period of the financial statement. So this is under the three broad heads. That is the corpus, that is the funds which we have received, and the loans we have received, and the liabilities and the provisions. That comes that we how to know that what the outflow are going to be an outflow in the future for any NPO is. But the donor has more interest out there. What money they had spent, what the money they has given is how they have been spent, and then how the money is being spent is generating an asset for an within the corporate within the NPO is more important to understand, like whether the money been utilized correctly or not. So Mithulji, this is a very simple. The first thing which comes to our mind as far as the balance sheet is concerned, the top of the line in the balance sheet onto the asset side is the property, power, plant, and equipment. That is a PPE in short form, but we keep on narrating always, because earlier it used to be fixed assets, but now it's a PPE. Fine,
PP.
correct. So, the idea is that in a NPO's balance sheet, what is PP? And now, other than PP, the one thing is always comes to the observation of the professional at large is many a times that the land or the any PP they gets free of cost, that is at a zero value. So they maybe because of the grant, because of the donation, because of anything, it comes at a zero value. That's how it has been recognized then. And how it has been measured in the books of accounts, these particular two factors. One is the classification of PP, then the asset generated through grant or the received as in donation, and how it has been measured in the books. Please, over to Nikhil.
Sure, sir. So let me just break this question into two parts, okay? Number one is basically, as you rightly asked, what is a property, plant, and equipment, and how we categorize this or classify this in the financial statement. Number one. Number two is if there is any a land or any other specific asset that has been received free of cost, okay, from the donor or from government, how should we classify that? So we will have two questions here. Let me just address the first here, first question out here. So property, plant, and equipment, as we all know, okay, it's an important area when it comes to the entity itself, okay, because that stabilizes or establishes the assets that the NPO has with them. Now, as it defines or as it meets the definition of assets, now any economic benefit that you are able to take it to the future from a particular asset, you are able to capitalize that in the financial statement. Okay. Now to decode this, number one, PPE could be varieties. Okay. You can see land, you can see building, you can see furnitures. Okay. And you just furnitures, fittings. Okay. And also some other what is a barrel plants if you have. Okay. So these can be categorized as property, plant, and equipment as per the respective standard. Now, if you take any standard, okay, the very purpose of any standard is to give you four important pillars. Number one is the rule for classification. Number two, the rule for measurement. Number three, presentation. And number four, disclosure. Now, when we say that as per the required standard, okay, if my definition of property, plant, and equipment are met, the measurement rule and the measurement framework would come into picture. Now, measurement picture, if you see, it has to be measured at cost. The cost will be the value at which you purchase. And also if there are some asset for which any additional activity needs to be considered. So all those costs, directly related cost that you expense, okay, for bringing the asset to its original condition or intended use. These are the definition being provided inside the standard. So if such costs are being incurred by you, you are allowed to capitalize them. Then, so now we are clear with classification, measurement. The subsequent is basically the presentation and disclosure. Now, presentation, we know that within the balance sheet, there would be an area for property, plant, and equipment, wherein we need to give those detailed headers, building, land, the furnitures and fittings, and so on. Now, disclosures is also been explained inside the standard, wherein you have the opening balance, you have the closing balance, you have the movement that has been encountered during the year, the depreciation, or let's say for intangible asset, it's amortization. Okay, if there are any other event, okay, restructuring, okay, or revaluation that has happened, you can give a treatment to that. So these are some varieties of disclosures or line items that gets into the disclosures for you to present property, plant and equipment in the financial statement. Okay, I hope this is clear. Now I go to the next question, which is if some asset has been received at free of cost. Now, how should we measure this? Now, the standard is very clear, or rather, the technical guide is very clear that if you see such asset that gets generated, which is donated or is free of cost, okay. Number one, you can record. You need to measure it as a nominal value, okay, in the balance sheet. So, which means that you will have, let's say, you have a land. So you will have a land at nominal value in the financial statement. Now, at the end, if you are selling this asset and the gain that you or the selling consideration that you derive at, okay, now that would be treated as an income, okay, for the NPO. So from the accounting parlance, the day one accounting would be, it would be measured at the nominal rate, okay, which is, let's say, 1 rupee or so. And then when you sell this or dispose this asset off, the consideration minus this nominal amount would be your income for the NPO. Now, this is from the perspective of what gets measured. Now, from the perspective of disclosure, okay, the technical guide is also clear that you need to disclose the market value or fair value of this particular asset from time to time. Okay, so this is how the measurement and the disclosure framework regarding an asset that has been derived by an NPO on a donation basis or free of cost has to be reported.
Thank you, Mithulji. See, Raviji, I just left in between one point, small point, and I just failed to ask this question to Mithulji. Raviji, I will request you please put a question. This is big, because this in relation to the donated assets. Now, other than the donated assets, there used to be an assets which is created out of the lease agreement, finance lease agreement, like. So my question comes is, why is this distinction is so important in reporting in the financial statement, like between the donated assets and the assets created out of the financial lease agreement?
Yeah, see, if it is, see, when I record something like a PP1 number, is it really owned by me or is it a leased hold asset? The classification though is important. Otherwise, I mean, people do feel that you are the owner of it. So it may lead to wrong interpretation. And at the same time, this will lead to we have to look at the accounting standard 12 if it is AS is applicable, Ind AS is applicable, Ind AS 21, sorry, Ind AS 20 will be applicable. Yeah, because when government grant, I mean, when you have received some assets at free of cost, basically, if you have received something at free of cost, in AS and Ind AS, accounting is same. You have got an option, a non-monetary asset which is freely received. You can record it at one is at nominal value, it's generally like rupee 1 or something like that, or at fair value. But fair value option is not there in accounting standard 12. Yeah. So if you are following accounting standard, basically, so you will be measuring it at say 1 rupee. Maybe you must have received like 100 crore worth of land. But simply if you write 1 rupee and the real market value is something different, and if you club with everything like other assets, that 1 rupee doesn't have exactly value only. Correct. So that's why a separate disclosure is always required. And the technical guide has clearly mentioned you have to disclose these donated assets and the finance leased assets. And not only that, as on the balance sheet date, what is the fair value of all the donated assets? On the balance sheet date, what is the fair value of all the donated assets? That also you are supposed to disclosure. You are not accounting it, you are just disclosing it in the notes to financial statements. So that is required. And not only that, during the year, the quantitative details and each class wise, say you must have got lands at free of cost. Maybe 2 lands you received. So 2 lands and the fair value of it. Also, you are supposed to give it in the notes to financial statements. And for each class of assets, quantity and fair value also is supposed to be disclosed.
Wonderful. That is really very, you had simplified so many things like, and Raviji, I mean, Mitulji, see, one point you had touched upon while deliberating upon onto the donated assets and the valuation thereof. I suppose, just for the benefit of the members, some more small clarification is required, like I suppose we should give to the members. It is that how frequently this sort of an valuation is required in the case of donated assets. And if, for example, many times it can happen that the fair value is not available, then what the onus is on to the auditor or to the NPO, how they should go ahead.
Sir, in terms of now, if you see from the perspective of how the measurement framework needs to work, okay, the donated asset, as you rightly said, how frequently should we measure? Okay. Now, there is no standard to it. However, as part of healthy practices that we generally see in the marketplace and also been prescribed under the technical guidance is basically every 3 year, okay, the NPO can decide or have a policy to measure the asset from time to time, okay, to derive the fair value. Okay. Now, if you see from the perspective of how the fair value, now to answer the other question which you have asked, how in case there is no fair value that could be derived for a particular asset, what could be another methodology that the NPO or the entity can adopt to? Okay, sir, it's a very tricky question. Now, in terms of, I would give it from the perspective, or I would take it from the perspective of Ind AS 113 as to what should we do in case if we are not able to derive the fair value of a particular asset. Okay, now we have to compare it with the alternative asset. If let's say if that is there in the marketplace. Now, if you say there is no such alternative asset or there is no comparable asset, okay, comparable is the word that has been used inside the standard. If there is no such asset, then you have to estimate what would be the cost, okay, the restoration cost that the entity would expense in case the asset is built at their premise. Okay, so all those costs, all those directly attributable activities that are necessary for the asset to bring it to the condition where it can be used by the entity needs to be arrived at, needs to be estimated, and based on that, the fair value would be measured in the financial statement.
So fair enough means thereby that it is some reasonable basis that valuation
Right.
should come or drive at. This idea is and it need to be documented and recorded how they had valued it, because sometimes today they don't have a reasonable basis for the valuation, but tomorrow probably they might have. Then they have to revise it, as been told by Ravi also that the revision is been say estimatedly it's been told to the members right now. That's 3 years is the good time to remeasure
Remeasure.
in this particular case in this type of assets, like it is always good. So in that case, like since we have touched upon we have touched upon 2 points like in the previous deliberation, because why these points become so important is all because of the fact that the money is being received and been spent. And when the money is being spent, definitely always there is an interest of the donor, as been told earlier also. So my question for the purpose of the clarification, I need a small clarification for you in relation to the same is that in relation to, because the grants can be monetary and the non-monetary. If the monetary, we generate the assets. If the non-monetary, then we receive the assets. Right? So in the case of non-monetary grants and the donation need, I mean, is that in specific detail which is required to be there in the case of non-monetary grants and the donation? is there specifically requirement to the disclosure, how they will disclosed in the notes to accounts, including the fair value and the quantitative information in while presenting in the notes, please.
I think this is addressed, sir.
Raviji.
No, I think this is
Mithul,
yeah.
sir. Sorry, Raviji, as a sentence. Mithul, just because you have touched upon this this particular point, like I just want a small clarification because it is not a, it is a related question. So I'm just sorry, Raviji, I'm just putting this Mithul because Mithulji will carry on from here. Mithulji, please just elaborate a bit on this issue. Please, small point.
Sir, again, if I just go back to our discussion of how the disclosure framework would work, okay. Now, the fair value, number one, would be the value that would be arrived after estimating all the possible cash flows, okay, that would be generated out of that particular asset would be arrived at, number one. Now, if that piece is not able to be calculated or estimated by the entity, then we have to resort to an alternative, which is the restoration cost, okay, of what if I want to create this asset at my premise at this stage, what are all the costs that I would incur? Additionally, all those directly related activities that would help me to arrive at the asset for its intended use. Now, these costs needs to be measured and accordingly should be capitalized in the balance sheet or the financial statement of the entity. Okay. Now, along with this, there are other disclosures. Okay. For example, how the fair value, as you rightly said, how the fair value has been measured, the quantitative related information, like how many assets are there. Okay. The the accounting policy as to how the depreciation, how the remeasurement model takes place for this particular asset are healthy signs which the entity must use and also promote in the preparation of the financial statement.
Fair enough. See, Mithulji, this since you touched upon to the PPE, the related second part of the same side of the balance asset side is because these are the tangible assets with the PPE we have discussed upon. Now the intangible assets also becomes a part of the balance sheet also. So equally,
Yes, sir.
like the same question which were there on in relation to the PPE, does it matter to the intangible assets also?
Yes, sir. Now, from the perspective of the difference between tangible and intangible is basically the physical presence, which you see in tangible assets. Okay. For intangibles, you don't see that physical assets. Now, simple example could be as simple as your softwares, your patents, your copyrights, your trademarks, some standard examples that we have. Now, all those guidance that for you to classify or let's say for measure, present and disclose that are there for tangible assets are also there for intangible assets. Okay. Now, in terms of wordings that we use for tangible asset, we use depreciation, whereas for intangible, we use amortization. Okay. Interestingly, for goodwill, which again happens to be a intangible asset, now, goodwill, as per the requirements of the standard, needs to be tested for impairment. Now, goodwill can be generated out of some merger activities or some combination that is happening at the NPO level, which in our normal parlance we don't see. But let's say if it happens, okay. Now, if in such a transaction, if goodwill gets arrived at, that goodwill needs to be tested for impairment from time to time.
Yeah. Raviji, see,
Yes.
since we are just going through this particular the right side of the financial statement, the balance sheet is specific. See, the question always is one word is used in technical guide is that to my interest also. I need to understand this particular word. This phrase been used. This is a concept. What is the concept of service potential emphasis in the case of NPO? His idea is that is in relation to AS28. How does it match and mismatch? I just saw to because this is a bit technical for me also. I just want to understand for my own benefit and for the benefit of the please, Ravi.
Yes, sir. Just a second, sir. I just want to share the screen.
Please.
Yeah. See, first, if you see the definition of asset, see the definition of asset with respect to other entities will be like, I'll speak out that a resource which is controlled by the entity for other entities, not for NPO. A resource controlled by the entity arising from the past events, expected future economic benefits to the entity, right? But here, the objective of NPO is to serve the society or serve the group or serve its members. So it is not necessary all the time, and as if something you want to recognize as an asset, that needs to give you the economic benefits, that is cash inflows or something. The point is, does it serve the purpose of the, I mean, does it serve the purpose of the objective of the NPO? That is more important. That's why if you see the, the definition which is applicable for the technical guide, only for this technical guide, okay, assets are resources controlled by the NPO. Yes, that control is mandatory all the time, right? As a result of the past events. Yes, that maybe we must have purchased it or we must have got it, right, on donation basis, could be, and from which future economic benefits, yes, it may come, and are that the points I hope you got it, like, and are service potential, right? So what is the service potential? Service potential is the capacity to provide the services that contribute to achieve the NPO objective. I have got some asset with which I will be able to provide services to the end user. I mean, end user in the sense I may be contributing. I mean, maybe it is not held for sale. I don't want to make money out of it. So money getting is not important. End of the day, is that asset useful for my objective of the NPO? That is what the important. I feel that is the only the meaning of the service potentiality is more important. If you link it with again AS28 like recoverable amount or something, no, don't look at like recoverable in cash. Should not see how much potentiality that asset has got to give the services to reach the objective. That is what I feel.
Sounds good. So means thereby the commercial angle is not to be there. It is the service potential which is more important to be looked into. That is at the time of understanding the asset value is concerned, and the concept of the service potential in an asset is concerned. So friends, since we are discussing the NPO, so the commercial angle is absolutely, it is zero. So it is not. Having said so, friends, because since we are discussing onto the right side of the our balance sheet. So next item immediately comes to our mind says it is always we have seen in the NPOs that the NPOs many times are surplus with funds. And if they are surplus with fund, what they will do with the funds? Definitely they will invest or they keep in their fixed deposits, like. So in the case of once they keep in the investments, like they can do an investment, what type of investment can be there? So my Mitulji just carry us to the point. As far as this particular angle of the investment by an NPO is concerned, how this is going through in the balance sheet. What we are discussing is the balance sheet.
Got it.
So how long-term investment are classified in the notes of accounts and in bank. That is something what we want to understand.
Got it. So, sir, if you see the world of investment now, okay, it's an interesting area because what happens is sometimes that once you dedicate a separate fund and you start investing, okay, it also becomes very, very critical for the MPO to disclose the related context in which the investment takes place. Okay. Now, if I be restricting it to long-term investments, so long-term investments are those investments which the entity intends to hold beyond a period of 12 months, okay, and they don't intend to sell this, okay, number one. Now, long-term investments could be in varieties of areas, while the technical guidance defines this as you investing in some central government securities or state government securities. Now, these are some standard examples that is there in the technical guide. But apart from that, also we see that these days there are NPOs, there are entities who invest in shares, who invest in bonds, FDs for that matter. Okay. Now, these are varieties of example of long-term investments that the entity or an NPO can have in their financial statement. Now, having said that, once this classification framework is set, okay, the next thumb rule that we should address is basically the measurement guidance. Now, measurement guidance in the world of accounting standard says that it should be measured at cost. Okay. Now, cost, until and unless there is a permanent diminution in the value, okay, that you encounter, okay, you should not provide for it. Okay? But if you see a permanent diminution in the value of the investment, then you should provide for it, and at appropriate time, you should also reverse it. Now, that is something that the accounting standard asks us to do. So that is how our measurement principle works. The third area, the third area where what gets arrived as how are we presenting this or and disclosing this in the third and fourth rather, the presenting this and disclosing this in the financial statement. Now, there are some ground rules that has been set by the technical guidance, but having said that, it is always advisable to give if user or preparer of the financial statement feels that some information might add value to the reader of the financial statement, they are allowed to give. However, at basic, the information that has been requested by the technical guide is nothing but the nature of the investment, the maturity profile, okay, if there are any how the market value is reacting, the rate of interest, how the fund has behaved in the past. So these are some basic what do you say, presentation or sorry, disclosure requirements that has been set by the technical guide. But having said that, if you feel like some more bit of information would add value to the users of the financial statement, you are happy and you are okay to provide as part of the financial statement disclosures.
Friends, as been told by Mikulji, so let's try to summarize. The point is ultimately whatever the disclosures, if more the disclosure, more means adequate disclosures, which will be in the interest to read through by the beneficiary and to the provider of the resources also. So it will add to the goodwill. Yet the goodwill and NPOs probably has no goodwill because they can't measure the goodwill. Goodwill is by virtue of, it's a virtual goodwill they do generate. And goodwill per se is also virtual. But it is hardly, it is very difficult to measure as the individual NPOs goodwill. But Raviji, my understanding as to what been told by Mithulji is in relation to the disclosure point. Now the point is as in relation to the investment is concerned, investment sometimes goes to the market also. We do the investment within surplus fund into the market, and the market we understand there are two types of market. One market which is quoted, another is market which is not unquoted. Unquoted means we have to derive the market value to with our own valuation rules. But in the case of quoted, how this valuation of these two segments, quoted and unquoted, comes and disclosed in the national accounts of the NPOs.
Yeah. So as you said, like say investments, let me cover the short term and long term in one go, sir.
Yeah, please.
Yeah. So say long term investment, and in simple words, I'd say long term is something which is not short term. That is like other than current investment is going to be called as long term investment. And as you said, like we must be investing, investing into central government security, maybe state government security, maybe other security, or maybe into even investment property, that is land or building, whatever it is. And maybe some other kinds of investments. Yeah. See, the first point, disclosure point of view, like quoted, unquoted, that is true. If it is a quoted investment, you have to give the disclosure of the market value as well. If it is unquoted, then you don't need to give the information. Obviously, you don't need to get the valuation done for this purpose, to say. Right. And when with respect to the valuation, if it is a long-term investment, as per accounting standard, yes, obviously accounting standard 13 will be applicable if you are following accounting standard. Long-term investment is always measured at cost. Right. And if there is any diminution in value, which is not in temporary nature, other than temporary, then you need to make a provision for that. Reduce it from the, even though use the word provision, it's like allowance, reduction of an asset. You cut it down from the investment only when the diminution in value is other than temporary. Right. If it is That is with respect to long-term investment, I close it. And with respect to current investment, like if you go by accounting standards, right, then it is going to be cost or fair market value, whichever is lower, right? And if there is any loss or something, is obviously it will be transferred to your. It has to be either cost or FMV, whichever is lower. And this cost or FMV is supposed to be seen for each investment separately, not in like all the items together. You are not supposed to measure like cost or NRV, cost or FMV, whichever is lower. Here also quoted, unquoted. Quoted, you need to get the disclosures of fair market value. That is what the basic understanding is.
Fair enough. This revision methodology, see, one point is as far as the disclosure in the investment and detailed disclosure is why it's so important. Because as you told in the earlier part of our this webinar, you said that we have number of types of fund, restricted, unrestricted, designated, non-designated, corpus, all that way. So if the funds are, say, for example, designated and restricted, and specifically in those two categories, probably the NPO might be having a surplus funds in these particular segments, and that probably may be in the maybe sort of a time bound in a framework to be spent maybe in a longer time. And then if that investment is rightly been made, probably that will help the beneficiary and the donor to understand where the funds exactly is being located and situated. So that will definitely, that disclosure, probably this is so important. This is what I'm just asking, rather, I'm not giving an answer, rather, I'm asking you, is it the so requirement is there, like to understand by the beneficiary and the donor, to understand the where the fund is exactly, by whether this particular project will be completed or not to be completed.
Exactly, sir. That is the basic idea.
Thank you very much, sir. Thanks for echoing my point, and thanks. This means you are quite educating me equally as been you are educating me, so equally you are educating to the other members also. Thank you very much for this saying yes to me. So my question to Mithulji now question is, see, we are moving very speedily, we are moving towards the downside of the balance sheet, and after reaching to the investment. And earlier we were discussing the PP. See, next heading, which broad head comes is the loans and advances. Probably that is one head which instantly is quite interesting and quite of an interest to us. Is how the see, again, is the consideration is the how the long-term loans and advances be classified in notes and accounts. This is the first point, and then concurrently we'll discuss the related matter later on. Please, Mithulji, please.
Yes, sir. So, sir, the very essence of loans and advances are those amount, okay, that have been paid by the entities to outsider and which is expected to be repaid back in the future. Now, this future is something that would define the category under which the loans and advances would fall. It can be short term if the expected maturity or realization we are expecting in the next 12 months, and if it is beyond 12 months, then the loans and advances would be your long term in nature. Okay, simple funda to categorize this in the financial statement. Now, having said that, there are varieties or examples of loans and advances could be your capital advances, or you have given your loans in loans to your related parties or to some other outsiders. Okay, that would generally fall within the frameworks of loans and advances. Now, this is the classification and the measurement rule. In terms of presentation, you would have to demonstrate the nature of the loans and advances. Okay, the variety under which it would be classified. Okay, the interest rate at which you have given these loans and advances. If there is no interest rate, even that fact needs to be disclosed. Apart from that, the recoverable part. Okay, in case if you need to ascertain, if you foresee that some provision needs to be provided for, then you are supposed to calculate, measure that, and also create that in the financial statement. Then apart from that, from the perspective of security, okay, how secured your loans and advances are, whether are they secured and considered good, whether they are unsecured and still considered good, not considered good. So all those bifurcation in the disclosures are supposed to be provided. Yes, sir.
So we are just fake end of the session because we have to take a query from the audience also. So we will be taking their query so that it becomes an, I mean, more educated way for us also. We have to educate ourselves, so we have to get more learned from your own deliberation. So my point is, so equally what the way it is for the long term, so it is for the short term. But one thing which we missed in between is the inventories and the receivables. Now, what the inventory out there in the case of NPOs, the NPOs, the inventory is it is always we get an free of cost goods for distribution purpose. So Raviji, I mean, if the goods have been received or if the material has been received free of cost, so how the valuation will be for this type of materials?
If if it is held for distribution free of cost, no, I didn't get the exactly question, sir.
Yeah, it is. If there is an inventory, if the physical inventory is available in the with the NPO, and they have been held for the purpose of distribution free of cost.
Okay.
Or at a nominal value. For example, they are getting some nominal.
Yeah, if you have received something at free of cost, then it will be at nominal value.
Okay.
And if you have purchased, then it is going to be at cost. So in general, it will be valued at lower of cost and replacement cost, which I mean cost or replacement cost, whichever is lower, sir.
Means thereby, just a small interjection. It is idea is if suppose some donation been received in terms of goods, for example, and that is in that case free of cost.
Free of cost.
And the material is with the NPO. Now, in the books of accounts, will that be shown as a zero value, or will that be shown as the nominal value, and crediting the corpus side?
Yeah, it will be at nominal value because here my cost is zero in the sense like nominal value which is equal to 1.
Okay.
Right. Replacement cost may be something more, but no, I will be showing it at 1 rupee.
I just put a request to my eminent panelists out there. Please, we have to, since we have to take certain query from the audience side also. So there are few queries out there in the chat box. Just if you say, then I can elaborate, or if you just go through yourself in the chat box, and if you feel comfortable, one by one you can take. By the time we are going on with the other query, before we take a question from the audience side also. So since we are onto the receivable side, so receivables, how should the receivable and particular donation, the grants be classified? What condition must be met to include them in the financial statement? This is Raviji, please.
So receivables in the sense any donations or grants, see, government grant something is receivable.
Okay.
Government grant as per accounting standard 12, you can record it like only when there are some two conditions are very clearly given. One is when the NPO will comply with the conditions and obligations. When government gives a grant or anybody gives you something, then they must have put some conditions. So when will you be able to comply? That means reasonable certainty that the conditions are going to be complied with. That condition you have to ensure, that is NPO has to ensure it. And the second condition, there is no uncertainty in receipt. I mean, donations are going to get for sure. Yeah. So when you ascertain these two things, then donations or grants are supposed to be showed as receivable. See, again, this is also like not a cash accounting. This is again accrual accounting. Even though money has not come, yes, I am very sure I am going to satisfy the conditions attached to it, and I am very sure I am going to get it. Then you can record like a receivable account debit, and it may be, I mean, credit will be as per accounting standard 12, it may be reduced from an asset, or it may be transferred to deferred income, or it may be transferred to income statement. I mean, income or expenditure account. That depends on the nature of the grant exactly.
Okay. Friends, we have many more questions because this is a ongoing tussle between the and which have been resolved and try to be resolved by the technical guide. However, like there are many more questions which comes from the audience side also. So my back office and my controlling panel, like since I'm the moderator first time, says my recap, like is that the live audience comes through their question, putting the question in a real time, or is that through the chat box only this question comes?
So these questions are from the live audience, which you
Yeah.
are seeing in the chat box.
Okay, fine. I request my panelists to please read through those questions. If you can, if you're ready to answer these questions, please go ahead.
The
So
first question,
this is the last question which is coming is the what is the difference between corpus and general fund, which we had answered earlier. Also, please bit in a small answer like if that is possible.
okay. So the corpus fund, what we said, corpus fund is the contribution by the promoters or the founders, right? And the general fund is which is other than the corpus fund and designated fund. Designated fund, I told like which is and it's self-imposed restricted fund basically. So a general fund which is other than corpus fund and a designated fund. That's all is the difference which we have answered already.
Fair enough. The next question which been coming from the member side and the audience side, is there any provision of the standard on revaluation of the fixed assets? Any citation is
Let me answer this question,
Please,
sir.
please.
So basically, there is no separate standard as such on revaluation. Again, having said that, this is part of the AS10 itself, the property plan and equipment, which gives us the guidance on how revaluation needs to be taken up for fixed assets.
Fair enough. So friends, citation and no citation is required because there is no specific guideline or rules out there which specify how the revaluation of the fixed assets will be there. So the latest question which is coming is yes, whether interest on FD can be recorded as per bank interest certificate on accrual basis. If not, how to handle this in idea. See, friends, before I leave this question to my eminent panelists and expert, see, one thing is there that what we're discussing today, as the outset in the initial time, I mean, at the beginning of this webinar also, I just try to elaborate that there are two independent set of scenario. One is as per the accounting standard and the financial statement. Other is for the purpose of the income tax. So as far as the income tax, how we'll be handling in income tax is through the reconciliation only. But as far as the accounting preparing the financial statement is concerned, it is through the technical guide. However, it is over to my eminent panelist. Mithulji, please elaborate.
Yes, sir. So as you rightly said, ITR or income tax, again, it's a different ball game. Okay. However, having said that, if the accrual concept is being followed by the entity, then yes, interest on FD would be recorded as per the accrual system or basis of accounting, and which we would highly emphasize that or highly recommend that the entity should adopt to. Okay. But having said that, the cash system of accounting is being followed. In that case, we would have to counter this saying that whenever the FD interest is received by the entity, at that point of time, it would be recorded in the books of accounts. Okay.
Thank you, Mithulji. Is the next question which is coming now? Questions are coming very fast, so we have to be very in a rapid round. We have to do it. Is the next question, is there any financial format prescribed for the financial statement of NPO, and what are the major differences of these formats from the format prescribed by non-corporate entities and LLPs? How to?
Okay. Ravi, you want me to take this question?
Yeah. See, the question is saying like, is there any financial format prescribed financial statements of NPO? Yes, that your technical guide will give you the format for the balance sheet, format for the income and expenditure, and what all the disclosures you are supposed to give for each line item, like long-term investment, short-term investment, property, plant and equipment, intangible. Every item they have given in the technical guide, like more than 50% of the information is with respect to the format. So there you will get 100% information, right? And that is what we were discussing so far. And what are the next point is what are the major differences of these formats from the non-corporate entities and LLP? See, if it is LLP, LLP non-corporate and NPO is meant for non-profit oriented, right? And these two, it may be LLP, but it may be profit oriented. So there are some differences, obviously, with respect to each item. The first major difference you will find it in equity itself. Right. So here you will find like NPO funds, restricted, unrestricted funds, like where there you will find like reserves and surplus, correct, on each different type of profits or allocation of funds. And in each area, I mean, disclosure wise also, it will be a lot of different things, right? With respect to PPE also, because here the main income for them is from the donations or grants with respect to NPO. But for the LLP, that won't be the major income. That is from the general commercial business industrial activities. So that's why disclosure wise, you will find a good amount of differences.
Raviji, is that not so that as far as the format and the compliance to the format and the requirement to the format is concerned, it is also equally that more accounting standards will be applicable in the case of the commercial organization as compared to the NPO. So once the more AS are required to be complied with, so more
Yes.
requirement will be there in the format.
Yeah, exactly. Like to add one more point,
Yeah,
for
please.
NPO, accounting standard 22 may not be applicable because NPO may not be paying tax only.
Yes.
Yeah, subject to their approval from the department and etc. But for the LLP and other persons, they will be paying the tax. So they will be making the current tax and deferred tax. So entire accounting standard 22 will be up. Like that, you will find difference in standard to standard and disclosure as well and format at the same time.
So ultimately, the formats which has been prescribed in the technical guide is suggestive in nature, and it is you can make a minor modification subject to one needs, but largely one should try to follow as much as one can, because this is the something which is coming from the horse's mouth, that is our ensure, and that to the accounting standard board itself, because the ASP is vested with an authority to prescribe what the minimum requirement from the member is and from
Correct.
the organization will be. Friends, I suppose we are pig end of the session, and I request my back panel, please, my help panel, please, to suggest what to next. Is the I suppose the chairman is on board? As the chairman is, I suppose, going somewhere, was
Uh,
going somewhere. Am I right,
yes, sir.
Shalini?
Yes, sir. Yes, sir. So, sir, as we conclude this very interesting and enlightening webinar on accounting of non-profit organizations, on behalf of Chairman and Vice Chairman ASB, I extend my sincere thanks to each one of you who has joined this session today and making this event a successful one. First and foremost, I would like to thank my learned speakers who generously shared their experience, their insights, and their expertise in the field of non-profit work. So your valuable contributions have undoubtedly enriched our understanding and the challenges and opportunities in the NPO sector, in the dynamic NPO sector, sir. I would also like to express our gratitude to our attendees, both near and far, for your active participation and engagement. And a special thanks to Sir Vinayji, who very lightly moderated the sessions smoothly and ensured the productive exchange of ideas. Sir, your skillful facilitation has been instrumental in maintaining the flow of discussions. We are also very immensely grateful to our leadership who has mandated ASB in organizing these kind of events, sir. Their, commit, their commitment to promote this knowledge sharing and community building within the non-profit sector is also commendable. Last but not the least, I would like to express my gratitude to the entire service providers tech team for supporting this initiative of the ASB in bringing this webinar to fruition. So, as we wrap up today's session, let us carry forward the insights gained and the connections made here. May this webinar serve as a catalyst for positive change within our respective organizations and the broader non-profit community. I once again thank one and all and looking forward to have your support and participation in the next webinar in this series. And we'll also be continuing some questions which we have left for the balance sheet items also. And thanks for your continued support to all of you.
Small, Shamini, just there's a small interjection. Friends, this is just for the information has been rightly been told by Shalini. It is that since this is a big chapter which we have to understand and we have to deliberate upon. So almost we are through with the balance sheet, but as far as the income and expenditure part is concerned, or other requirement to the disclosure is concerned, we'll be taking up tomorrow. Is that clear? Tomorrow the same time, 5 to 7. So
Yes,
don't miss. because this is the first part we have to understand, because we'll be ending with the financial balance sheet, but we have to start from the income and expenditures. Over to
Exactly.
Shalini ji, please.
Yes, sir. So looking forward to have you all again for our next webinar. Thank you and good night. Thank you, sir.
Thank you. Thank you.